Dr. Pepper. It has a mystery recipe. Nobody knows what the individual 23 secret ingredients actually are. Also, it doesn't have a period after Doctor, which has sparked lots of crazy theories and legends. And another unusual fact about Dr. Pepper is they have a museum in Waco, Texas. It's the Dr. Pepper Museum in the original bottling plant back from the 1880s, and you can go and taste what the original recipe was like back there. Very different from the original Coca-Cola recipe and that which you're drinking today in Dr. Pepper. Talking about today and recently in the Dr. Pepper saga.
Dr. Pepper, what's the worst that could happen?
There was selling a block of Dr. Pepper shares, Kruger Dr. Pepper, KDP is the ticker, by Jab Holdings Company. That was at the start of March there. They're reporting that a unit of Jab Holdings plan to sell an aggregate of 86.96 million shares through their own secondary offering. That's an investment firm. It's backed by the billionaire Ryman family, and they granted an option to the underwriter to purchase an additional 13 million shares for a period of 30 days following the date of the offering. This is interesting to you as a trader to know that the beverage firm's plans, how it will affect the float, and the aggregate 35 million shares in the offering at a per share price paid to the underwriter will effectively equal a share buyback. It's like a repurchase in effect. Similar to a previous one, $4 billion is the total of the buyback, the repurchase authorization, and 1.8 billion will remain outstanding. So following the completion of this offering, assuming full exercise of the underwriter's options to purchase all the additional shares, Jab will beneficially own about 21% of KDP's outstanding common stock. So that's one particular entity that you know owns a fifth of this thing. It'll leave about 79% of the stock available as the public float. Under the terms of the transactions, the remaining shares beneficially owned by Jab subject to a 180-day lockup, which means that currently you're looking at March, April, May, June, July, August. Good 180 days, 6 months before those shares will be able to be sold again. That's a significant portion of the float locked down then. So KDP, in their 2023 Q4 earnings call, talked about this unit share block and let everybody know about what was coming up. Now, that has led to this unusual effect on the charts where you have price action and your momentum indicator showing you something you don't often see on KDP. Now, in front of us here, we've got the weekly time frame showing the history of this thing as far back as 2008, 2009. So quite obviously this has been in an uptrend, that uptrend defined by higher and higher prices, and those prices, when prices wasn't making a high, coming into these low periods, come up, makes a high, then a low period. These lows, as you can see, this second low here is much higher than this first low, so this would be a higher low. So in the combination with this 1, 2 higher highs, you've got higher highs, higher lows. It's been an uptrend. Now that's been true of this stock forever. KDP has forever been going to the top side. Recently though, price action rolling over, and for the very first time it's lost this 200 period moving average on the weekly. That's the very first time that's ever happened. So potentially a huge opportunity, or potentially the start of Dr. Pepper's decline. Now, it's been around since 1880, and the economy has been soft on certain aspects that affect beverage companies and coffee companies over the next wee while, but KDP not overly affected by that, and in tight inflationary conditions still doing okay. Now you can see that rolling over we talked about now, slightly more zoomed in, still on the weekly time frame, and price action coming down, losing the 200 period moving average on the weekly time frame. 50 simple also going through that 200. Price action tested the cross here, as you can see, came back up to test that, and it got rejected, so got knocked back down again. That would typically, as part of a downtrend, as you can see, this is a high, this is a high, this is a low, this is a lower low. After that rejection from a death cross, a lot of people would be expecting continuation of the downtrend and another lower low, which might come in at around $25. That would also be a golden pocket, and having lost a 236 and found rejection at the same time as that death cross, it may well be that you'd be looking for a move that took you to the next important fib there, breaking back below the 50, previous low being back up at a 382, and a rejection resistance being in at 236. It's not all that much of an imaginative leap to see why there would be a degree of interest in it around $24-25. Looking left, you can see that there was a touch of support here. As price action went through it, there was a touch of resistance. The significant level for the formation that price action has been in throughout most of this period of time would be there. Any further down, you'd be in danger of testing the previous wick low. If that was to break, you'd be in search for support, and you would probably define all of price action then, if it was in search of support and putting in lower lows and lower highs, rolling over and losing this important level at around $19-20, then you'd be looking for it back down at around 13, because it'd be in search of support, and all of this price action here, subsequent to rises above that level at 13, you were bearishly divergent, as you can see here. Lower highs on the momentum, higher highs on price action. So there are warning signs about everything we've seen here, though this is back to 2019. So you can't use divergence in the classical way there. We're just making the point that price action here could have potentially been putting in stronger signals on the momentum indicator, which it has been doing previously, always. That has led it to breaking down below the 200 period moving average. And then the question is this an opportunity, or is this a period of danger? See the deep value on this based on the trend. Look left and you can see why it might be a support area, and we'll sketch out the potential for a trade there. Other information that you might think, and I certainly do, is interesting about KDP is that in the most recent weeks there, they've been among the top insider buyers, approaching 0.01% of the stock being bought back, partly due to that issuance, secondary firm issuance that we talked about, but also CFO has been buying shares. And that's one of the reasons why we're looking at this thing today, because your friend of mine, Minnor, creating a fax request, the total legend that he is. We absolutely love Minnor here on the channel. If you see him around, say hello to him. If you're on Discord and you get a chance to work with him, you'll benefit. He's a top lad. We'd appreciate your insight. Weekly death cross, we talked about that, didn't we? Rejection of the 200, a simple moving average, we got that one, Minnor. Lots of selling. Continuation of a downtrend seems most likely. Wow, we were on the money there. Sharing an opinion very much similar. Would it be wrong to target that as it breaks market structure? What an interesting point from Minnor. Really, really interesting point. So, let's talk about market structure. We have the Rocky Outcrop ToolKit here, and as we are so very privileged, we've got on here Fibonacci retracements. We talked about them. We'll take that off now that we've covered it. We've got the moving average. We talked about that with Minnor, the cross double moving average strategy. Here's the premium and discount zones. This is all part of the Rocky Outcrop ToolKit, which is particularly helpful. You've got your swim structure with the horizontals. I think, therefore I swing. And then you've got strong, weak, high horizontals. These are the sort of things that can really add to your technical analysis, reduce risky entries, and provide you with extra confluence. So here you've got a clear example of the fact that if you were buying this up at around 40, you'd be paying a significant chunk there, a significant chunk more than the average. In and around here, you've got reversal break and price action losing that level is where we found the most recent resistance now. It's also confluent with the prior monthly high. Adding all this together from one indicator is fantastic. We can see the equilibrium zone. So if things drop below 30, would be very significant with regards to market structure. And then the biggest discount that you can see on the chart with price action presented as it is at the minute, based on the market structure, is that you'd be looking for this thing to be in towards $20 or below to get a discount on it. And so the risk and inflection point up at around 30 to take profit if you're looking for, without extremely unusual moves. The most recent which have been bought up, all of them, as opposed to a sharp shift move to the top side and instant rejection. It's been lows, support, and instantly bought back up again. So is that going to change? Well, this is an obvious area to target for a discount entry, and the indicator there, Rocky Outcrop ToolKit, helping us identify that. It's all on the weekly time frame though, and it's difficult making the entirety of your decisions on that one factor alone. Here we have that indicator coming into its own now, giving us all the different areas where you would have to look for potential reversals and continuation. You can see that you got the potential for it here, move back up again, continuation break down. As it goes through it, you have to worry about the next future of price action. Similarly again, reversal break. As it lost it, price action coming on down again. Providing the opportunity to get discounts then will be in line with this trend. Lower lows, lower highs, market structure identifying that you're paying a premium if you buy this anywhere near the top side at the minute. It's going to get rejected. The probabilities are that you'll be paying more than those people who've been entering on average, and you'll be buying it at the area of the most risk of rejection. And this indicator is fantastic for showing you a number of different things, along with the fact that it does all the hard work we did in identifying the zones, figuring out where the risk would be, looking for the start of an opportunity, and how it would be you'd manage it with respect to previous price action. That's all done for us here. Also, when we look at this on these extra time frames, we get the evolution of trend, and that helps with our own thoughts about the potential evolution of price. And then you look at these lower lows, we factor all that into our assessment, and we also go down to the momentum here, where we've got on the RSI down to the daily time frame, and you can see that in this most recent move down, everything's working in a linear fashion. It's got a clear level of resistance on the top side. Same is true for the support level underneath. That continues in this downward sloping channel on the RSI. That's a manifestation of the momentum. And at the same time, you've got the previous lows, and where you can see this thing bounces at on the daily time frame, all of the bounces here within the bearish control zone. We can give these, group those, they're in around the bottom side of the bearish control zone. You'd rarely find support at the top side of it. If it was to be doing that, it may well be that price action is then going on to test one of these zones, which would later be a premium you'd be paying to buy it. So a good place to take profit and short-term trade potentially until such times as the trend changes. So prior monthly high also coming in at $30. That's, like we pointed out on the weekly, confluent with other factors. Down to the 4 hour now, they've got lots of different candlesticks showing up. Don't need quite as many, but to show you that rolling over effect in price. And it's still true to say then that if you're looking for bounces in price action, these lows, if you see there's bullish divergence in that you got a lower low, but you didn't so in the momentum indicator, all of that comes in a pairing, and it happens in the low side of price action. Low side of price action is when the RSI is clearly here in the bearish control zone. Even if these lows are debatable as with regards to structure, we can still see that momentum gives us a clear picture that it's lower and it's going down, and then the trend likely evolves similarly as it has done. So 4 hour time frame, you can't rely on just the bullish divergence, nor can you talk exclusively about the continuation divergence on the top side, because there is this important aspect of where this bounces on the momentum. So it follows that pattern and flow. Adding to that, we've got the MACD, and as you can see here, at these areas of extreme positive momentum on the MACD, which you can see on the histogram here, they are typically much greater than these little periods of flux above it. This is when you find the biggest rejections in price action. You see here, again, momentum pulling to the top side. The biggest moves to the top side are clear here on the histogram MACD, and as you can see, it rolls over again every time. You get that with a cross MACD line above the center line crossing through the signal line as price action gets rejected from an area of resistance. And if we go back to the toolkit then, stick on the moving averages, so we can look at these across the time frames. We'll also take that Fibonacci retracement, and there's the moving averages. Bing bong, the price is wrong. Oops, pardon me, don't need that drawing, thank you very much. And here is the indicator populating all of these little bits of data for us. You can see that these topside moves, these rejections here on the MACD, they come with price action falling back below the 200 period moving average, which is where loads of people are jumping into the short side of this trade, and or people are taking profits. And there's been a lot of dead weight in this thing, despite the fact that volume has been picking up. When we go up to the weekly time frame again, this thing had an awful lot of volume back before we started talking about, the subsequent divergence, if it is pulling over again, the weakness in momentum in this trend that led it to breaking a 200 period moving average for the very first time. If we've got the volume up and looking at it back then, we can see that there was an awful lot more volume in this thing. Now, the way the volume is working is volume per tick. So when this is higher, despite the fact that the stock price is lower, that's even more significant, right? Because it means that the total value of the trades is judged not by the number of them exclusively, but the value of them. And stock price is lower means even more of them have to be happening. So a significant drop off in the volume is what's led to this thing getting rejected from the premium zone and heading towards discount. Having lost the 200 period moving average, back up on the weekly time frame, the question is, do you want to go long on this thing? Obviously, if you're looking at it from a billion year time horizon, it'd be very dangerous to be short on something that's only ever been in an uptrend, putting in higher highs and higher lows. It's not actually confirmed that on the weekly here you've got this thing reaching some all-time high that now has to come back from some 80-90% retracement. No, none of that is true yet. Market structure on the weekly is still positive, despite the fact that since September last year you have seen it roll over a little bit. Daily time frame though, it's true to say that there is a significant percentage between where price action is now and this potential low. It's very significant if you're looking at that from current prices, a good 32% plus off this thing. More to come in and test that low, and that sort of percentage move in the stock price, definitely you could take advantage of that in various ways depending on the contracts or instruments that you're looking at. Certainly would need to be cautious if you were talking about a long-term horizon on your trade, whereas a 4-hour time frame, it's the same story. You'd have to be looking for these bounces, and the sensible way to be trading this thing is either to be maneuvering for if you're bullish, is build a maneuver into position. So you would let price come to you, you'd scale up from it, you'd limit risk at all times, and you'd let this thing evolve into profit as you got your position together. So that, if you're buying it in around these levels, if it's a downtrend, this is a downtrend. Down, lower highs, lower lows, price action going down, going to keep going down until such time as it's changed its mind, and that's the trend, down. We talked about on the weekly it's up, but that's providing the potential for an upcoming opportunity to the long side that'll be judged when price action itself starts making a move to the top side again. We don't want to be buying things as they're going down and us being long just because we're contrarian. We want to be looking for the moment of maximum opportunity, and if price action does go down in this fashion, even if it then starts to go up again, if you entered at any of these lows, you get a significant impact on your mental well-being trying to hold things for a long period of time, even if you are ultimately right, if you've gone through all this disappointment. So it's definitely better to scale into position, manage risk with stops, and be cognizant of the fact that you're buying into a downtrend. So it's very dangerous. It's less likely to work out than instead waiting for this part of the trend so that this leg moves up again, it starts breaking what was a previous high. Even better, comes back, finds support at that level and goes on again. Then you can say, well, I'm entering in an uptrend, and in an uptrend, having found a long-term level of support, you're talking about up here on the weekly time frame, these sort of lows, that being a long-term level of support maybe here is where you get the opportunity to follow price up with a stop in profit all the time and watch that evolve into a potential uptrend on the long-term time frames. But you have to be aware of the fact that now as the drawings start to clutter everything on the screen, that currently it's in a downtrend and you want to be buying it when it's confirmed in an uptrend. Here's an important high, it's at $30, and that's not happened yet, you know. So is the moment of opportunity arrived? Well, in at around 19.20, $30 being resistance, that would be a definitive range that price action could travel through. We've looked at the indicators that show us that would be where you get discounted entries, and topside would be where the risk profile changes and it'd be somebody else's trade to take on again, and you'd be able to make the most of that range. You'd manage your risk around the lows because this is making lower lows and lower highs. You've got clear areas in around 27 to start trying to think about that. But ideally, it would be pulling to the top side and putting in higher highs and higher lows. So until such times as price falls down to those potential entry zones and then starts moving up, we won't have proof of that, of course. So with regards to market structure and entering long, what with the fact that it's offering up potential opportunities by having broken through moving averages, if you believe in it and you're bullish, then slowly managing that entry and executing at the lowest possible risk worth a stop loss might let you scale into a position which evolves and allows you to take advantage of that move to the top side. But also worth bearing in mind that on these lower time frames it's in downtrend, and anybody buying it is trying to catch a knife until such times as it itself proves it's moving on up again. Because on this 4 hour, you know, going back to the drop that took us to where, or well, that's not going to get us enough on it. You know, the drop here on the weekly time frame, this previous time we got to the area of where the deepest value is, that $19-20 area. That was a really quick move, and catching the knife at any stage, you know, it could keep going obviously, and you've no idea where it's going to stop. Well, it might not stop here at 19, whereas a lot of people would have imagined this thing stopping in at around 23, looking left here, and that's why it's a knife, because it went right through them, and any sensible stop to then recover. So is that where the opportunity lies, in around these levels? If it doesn't, then you're turning this in a weekly downtrend, in which case there's going to be an awful lot of people looking at it, where it might end up. Where it might end up down there. Let's go on to the 15-minute time frame. Delete the, well, hide the drawings. Automification. Price action only. And here's, even the smallest time frames, you know, any sort of recovery, I don't need Bollinger Bands to make this point, any sort of recovery, which are also available as part of the Rocky Outcrop ToolKit, so there's no need for it to be beyond that there. You've filled a gap and left many to the top side on your way down again. Any of these recoveries, they're very quick staccato there. You've got your V-shaped recovery, pushes on, gets to an 886, closes a gap and no more. So like, I'm going to go ruin price action by putting all the drawings back, but here you can see you got to your resistance level. Anything that put on beyond that is going to be bearish. The divergent on the momentum indicator here, you see, and so like this downtrend, continuation divergence, reversal divergence on any sort of short-term pop up to the top side, 5 minutes. You know, this is the character of something that's just breaking down. And anytime price action is in the bullish control zone, that's really just the nature of this downtrend, that it's at the extreme levels, extreme overbought, if you were using it in that sense, that indicator. So even on those bitsy tiny whiny time frames, 15 minutes, am I getting anything here? You know, there's nothing to the top side that's screaming out to me, other than gaps, which are so far being used as good rejection points. And the reliable time frames here, top side, weekly, daily, they're yet to be proven to be in an uptrend at this particular moment. So we wait to find out the truth about price action. You know, I mean, you could just buy it here, and like, what would be the worst that could happen, right? What would be the worst that could happen if you just bought it right now? I wonder. You tell me in the comments below, and thank Minnor when you see him. Cheers, buddy.
That's it! Step aside! Butt naked kid coming through! Come on, make a hole! Whoa. Hello? Hey guys, we're on TV! Up there!
Rescue workers had just taken a young boy from a store where he was trapped under a pile of smoke.
Yo, he's in my math class!
Calling him butt naked boy.